ये लाइव चल रहा है। जीवन क्या कर ही रहा है।
Welcome back everyone. We'll be starting with the finance panel discussion now. So, digital financial services are transforming the way we bank, invest and manage money. As India progresses towards Viksit Bharat 2047, technology is playing a crucial role in making financial systems more accessible, efficient and secure. From digital payments to risk management, the financial sector is evolving rapidly and today's discussion will shed light on its future. To explore this, we have an esteemed panel of industry leaders who have been driving innovation and shaping the financial landscape.
Today, we are delighted to have Professor Ujjwal Kango, a distinguished faculty member and expert in the field of work and business history, public policy and labor regulation, as the moderator for our panel discussion. With extensive research expertise, bringing depth and clarity to complex topics gives him a unique perspective on the financial and economic systems shaping our world. We would like Professor Kango to please welcome the guests on the stage.
So please welcome the guests to the podium of the stage, or we have the podium. So we are honored to have Mr. Mayank Sharma, Director of Finance, Global Client Accounting at ZS, a global management consulting and technology firm. With over 7 years of experience, he has been instrumental in leading client financial management and revenue recognition strategies, ensuring efficiency in global client accounting operations.
Up next, we are privileged to welcome Mr. Tarun Ahuja from HSBC, a global leader in banking and financial services. With nearly a decade at HSBC, Mr. Ahuja has played a key role in finance transformation, risk management, and ESG initiatives, helping to drive large-scale financial change and strengthen risk.
Joining us next, we are privileged to have Mr. Salin Agrawal from CRED, one of India's fastest growing fintech companies. With over a decade of experience in finance and a background as a chartered accountant, Mr. Agrawal has been instrumental in shaping financial strategies at CRED. Please welcome Mr. Salin Agrawal.
And finally, we have Mr. Vatsalya Chaturvedi from Barclays, a leading financial institution. With over 11 years at Barclays, Mr. Chaturvedi has been deeply involved in risk governance, financial controls and regulatory compliance, ensuring strong internal controls and navigating complex financial risk. Please have a huge round of applause.
A very good afternoon to all of you and a big welcome to the esteemed panelists. The topic for today is digital financial services driving economic growth for Viksit Bharat 2047. So to set the context for today's discussion, the Government of India's Vision 2047 outlines an ambitious roadmap to transform India into a developed country by 100 years of its independence. And digital financial services are pivotal in this journey. And they are pivotal because of three major factors. One, because they extend the banking facilities and financial services to the unbanked, so financial inclusion. Two, they also provide efficiency and transparency in banking services. And three, they provide growth through innovation and accessibility. Fueled by government initiatives, technological advancements, and evolving consumer behavior, digital financial services are revolutionizing the very nature of doing finance. So today, let us discuss about the future of financial services and how emerging trends will shape the next few years of financial services. So we are very fortunate to have an outstanding panel today featuring experts who bring invaluable experience and perspectives from both banking and non-banking institutions. So let us begin by inviting each panelist to share opening remarks. So I'll begin with you.
Thank you. Thank you everyone for inviting us in this beautiful campus. So we are talking about the digital financial services and Viksit Bharat by the 100 years of independence. It is important to have that, there's no doubt about it, but what are the key trends or key risks that India faces as we move forward? I think we are doing pretty much good in terms of having those key trends or key setters going into the market. So the digital push is there, innovation is there, a lot of invention is happening in terms of how the finance is being pushed to the marginalized in India, which is a lot of people. But my major point of view on this topic is that how government is going to match the DPIs, the digital public infrastructure or DFIs, or how are they going to push the internet or some of these apps or all the invention which is going to happen in this sector to the people who are not really keen on using it. I'm not even saying it they can or cannot using it. There's a lot of population in India which is not even keen on using it, and there are reasons for it. Various reasons for it where they do not really prefer to use this thing. The interesting topic that here is in terms of credit push that we need to have in there. For the entire economic growth in any country, we need to have the credit available to all the sectors of the society and the industries. If you see it from the DFIs or the digital services or financial services in India, it's in the metros and the tier 2 cities. I think we're doing very well. And that's the only piece is being visible to the most of the people in India that digital financial services is doing really good. Credit is one example. I was talking to Salim in there. Even if you look at it's customer data, people who use credit cards, max to max they're going to tier 2 or tier 3 cities. There's a lot of data, a lot of population, a lot of opportunities and the prosperity which is not being even touched by the digital financial services. And the challenge in the next 20 years or the 2 decades for the India and Indian governments, policy makers, is how do we penetrate to the market which will drive the real growth of India as an independent or developed nation.
Thank you. Interesting thoughts there in how we will increase penetration going forward. Tarun, your opening remarks.
Thank you. Thank you first of all inviting here. Thanks. I think it's very important we understand why 2047. We know it's 100 years of our independence. And the vision which India is looking is that, it's going towards, so-called that developing, that has happened enough. So we want to move to developed side of it. So that's why I think the government has phased out that particular vision and got a very good stepwise strategy. I'm very happy I'm in India. I worked with a couple of countries in the past. I'm going to be here in India for this decade and will definitely kind of, look at this growth by myself and hopefully contribute by the ways I'm doing. A couple of pointers, where India wanted to go ahead. First of all, we definitely want our economic growth and we want to be a global leader. We just don't want to be a follower anymore. So you will see a lot of initiatives coming out, which says, make in India. We want to make our economy from 2 to 3 trillion to 30 to 40 trillion. That's the target we are working towards. Digital economy, and as we are talking about digital financial services, I think financial inclusion has been spoken about everywhere. And, again, I was talking to Salil and credit definitely kind of, helps there. You will see a lot of platforms coming up, payment has been one of the innovation which India is leading. I don't think so any country is even near us by on competing us on payment. A very good example, a friend who relocated to Canada 10 years back came and said, I want to try making a payment using a QR code. It's that fascinating. And it's not the example that the other country have not tried it. I think Barclays launched a product in UK first called PINNACLE. They are terribly failed in it. Sorry. So, but that India is that kind of a 2047 vision. We are talking railways, we are talking smart cities, we are talking 6G, we are talking digital insurance, digital credit, and I'll not forget my job. We are talking sustainability. So we are also made our commitments to UN. That's the giving back to the our Mother Earth. So we will be contributing to the carbon targets we have taken, and I'm sure India has a very good NZTP, which is called Net Zero Transition Plan towards. So this is in my opening remarks, we are touching all from our 2047 perspective. Thank you.
Thank you, Tarun. Maya?
Yes,
Sorry, yes.
Firstly, hi everyone. I know it's a post-lunch session, so let's have some energy for the next 1.5 hours. So good to be here in one of the Himalayan islands. Never been here before. Glad to be first panelist to come to the new campus and see it around. So thank you for having us here. So yeah, 2047, I think a vision which the government has. It's always good to have a vision, correct? So as long as you have a vision, you end up going towards it. So 2047 is a vision of the current government. Multiple engines have to drive this growth. One of those is digital financial thing, which will have to drive the entire piece of it. So like I always say, for example, UPI, correct? So government plus private partnership is something which will drive this entire initiative. If there were no Paytm during demonetization or COVID, it would have not been as easy how it went by. Correct? So I still remember Modi's speech at 8 p.m. And the very next day Paytm downloads was skyrocketing. So it has to be a public-private partnership for anything to do. If you have to drive India towards developing to develop, it has to be a combo of both. So with the company which I represent, Cred, we are in a similar space of trying to do new innovative financial products. So I was giving them an example of loans. For example, if you go to a bank today, like he was just giving an example, they roughly take 3 to 4 days to process a loan. But we are fortunate enough, or probably the engines which we work on, we give loans between 3 minutes to 30 minutes. Correct? So those are unsecured PL loans which goes into your bank account. So yeah, you need such innovations to come in. You definitely need banks, but you also need players like us who try to come up with different ways to do it. So yeah, it's going to be a good journey of next till 2047, and let's see how India is. We are in a perfect time to be in India, perfect time to build in India for users of India. So I'm very excited about it.
Thank you, Salim. Vatsalya, your thoughts?
Yeah, good afternoon everyone, and thank you for inviting us to this lovely place. I've always crossed this place but never got a chance to stay for being at Sirmaur. So I'm a chartered accountant, so is my friend Salin as well. So nothing unique about that, but let's talk about 2047. So I think currently we are at a space, when I talk about we are talking about India as a country. We have never seen a scenario where entire demographic population is trying to take us to the developed nation tag. So currently, if you're working at your age group, probably for the people who are in the age group of 20 to 25, and at the people who are till 40, 45, everybody is trying hard to get into that stream. What will it entail? I'm sure my co-panelists already mentioned there will be a lot of focus on the digital banking. There will be enhanced digital infrastructure which will further propel this stream. But there is also a double-edged sword. Why I say that is because India domestic loan is also increasing for that purpose. So we are currently sitting at a 158 lakh crore loan, which gonna swell up, because there will be a lot of national boost of funding which will be required if you want to be the developed nation. So we're talking about an economy which is currently sitting at a 3 trillion to take it into a 30 trillion in a space of 20 years, which seems slightly ambitious, But yes, again, we have all the infrastructure with us to take us over there. What exactly is more required right now is that we need to also focus on the declining debt to GDP ratio. Currently, if you're talking about, we are still recovering from the post-COVID area where we see government had to infuse a lot of debt because there were companies who were not able to facilitate their work. So we are that is also one of the scenario which we need to look into that. Then also again there is a focus on a lot of MSME pushes which is happening. There will be a lot of tier 2 and tier 3 cities who are enhancing in contributing to the economy of the country. That is something which was unusual. We never see rural population contributing to this large impact, which they have started impacting now. There are a lot of microfinancing banks which are set up in tier 2 and tier 3 cities, which we had always unheard of. So a lot of push has come from the government, a lot of subsidies, a lot of effort has gone to ensure that by 2047 we are in that shape where we can see near touching 30 trillion. Little issues I would say, but yes, we are on the right path. Thank you.
Thank you. Interesting thoughts around the macroeconomic factors that are contributing and will be essential to understand with this shift. So my question, so Salian mentioned actually, he mentioned how non-banks and companies like Cred are providing offerings in this new shift where we see more and more non-banks and other companies offer digital financial services rather than typically banks that used to offer digital services, financial services, right? So how do we see the relationship between banks and non-banks or fintech companies and banks? As in, do we see a rivalry going on there, or do we see partnerships and collaborations developing?
So I think it's an ecosystem, right? So there is no rivalry. So let me give you an example of how this Cred journey started. There were times when 4-5 years back, when we wanted to start this product, we had to knock doors of banks to let's please partner with us, let's start giving loans and everything. But now things have changed. Now banks know this is a perfect, one of the good channels to drive financial credit, correct? So now it's more a partnership, never a rivalry, correct? So it's just a different channel for a bank to start distributing loans. Banks used to traditionally distribute loans via phone calls or whatsoever. This is just one additional channel. Like in the morning we discussed about quick commerce. So e-commerce, then there was a channel called quick commerce. So if an actual product has to be delivered, you can either do it on Amazon or on Zepto. Correct? Similarly today, banks can also give loans. It could either be via their channels or via one of those fintech platforms. So we cannot work without them, correct? So we cannot ever get into a rivalry with a bank. We need bank as much as, if we have to survive, banks are there for us. So yeah, very much a partnership for sustained growth.
Interesting, yeah, and probably more and more, it's more like a partnership rather than rivalry. Yeah, fair enough. Your thoughts, Tarun, on this?
Yeah, I'll give it a term. I'll call it competition to collaborate. So, we will definitely have to collaborate. There's no doubt about it. But of course, that competition has to be there. All strategy paper says that, the economic logic comes in the middle. So it has to be there. See what bank has strength? Bank's strengths are, trust. We come with a lot of trust. There's a lot of liquidity available, which, a fintech startup won't. We are backed up by government, and huge regulations with respect to even when we launch a product or even if we go to insolvency. All of us, very heavy regulatory landscape. What fintech brings us? Agility. Doing things quick, like 3 minutes to 30 minutes. Well, I don't think so a bank can do 3 minutes to a 30 minutes lending. So I think when we work together, then, and there are a lot of examples, co-branded cards are a good example, Amazon and ICICI. Digital wallets are the good example. I used recently a very good travel service by Neo. They have partnered with SBM Bank, and they're offering the Google rate foreign transactions, and anywhere in the world on any currency. So even if I'm going multi-countries, I load my Neo card using UPI in India, and then if I'm in Dubai, I can take out dirhams. If I'm in UK, I can take out GBPs. So that's kind of, product innovation is only when both the parties are partnering to each other. So that would be my thought on it.
Yeah, interesting. How innovations are happening because of this compete to collaborate. Interesting. Yes.
I want to ask a question to both of them, to be honest, so that's why I picked up the mic. Sorry to be a moderator here.
Yes.
So, the question started with, like, are we seeing as a competition or a partnership? My question to both of you is, or our banks are losing their business because of the agility these tech startups are coming up, or because they're taking more risk? Or are the tech startups taking too much risk beyond their ability to keep serving it without the help of bank? Because I think the banks are pretty clear who we are going to give the loans or who we are not going to give the loans. That's when you come up and the underserved of India comes up in the 2047 vision. But those loans are risky, Salim, right? I mean, you never know whether they're going to come back or not.
Okay, so let me try and give an answer. Right? So currently we have, from a credit profiling perspective, there are CIBIL reports which come out. So those are traditional credit reports which you and I have, which our financial history gives us. And they give a score, 700, 750, whatever. So, but there are multiple corporates which have an alternate credit history, wherein yes, CIBIL gives you an XYZ, but our machine learnings, our proven machine learnings, our tests say if it is XYZ plus another 50 more. So that is where we come up, wherein yes, we are not disregarding your CIBIL XYZ. Your XYZ remains there. We're just trying to give an extra add-on, not by taking additional risk, just by probably taking more data into consideration. So a CIBIL score probably takes ABC data. We just try to say ABC plus DEF. So with just more data, we try to refine your credit skills more, or credit score more, and just that's when we present it to a bank like HSBC and say, yes, here you are. I know your profile base is 750 plus, but you can also consider 700 plus my score and see if it works via your. So every bank which we partner with, obviously we risk profile them, but then they also independently risk profile because ultimately it sits on their books, right? So if a bank today gives loan via credit, it is still sitting on their balance sheet. It's an XYZ bank giving loan to an ABC. I'm just an intermediary in between, right? So every bank has their own set of rules and everything. So we just help them guide, but ultimate call, yes or no, still rests with the bank. I do not have any say to say, yeah, Manish ko mat do, yeah, they do, whatever.
Interesting. And what do you have to say, Vatsalya, regarding this? Because the question is because banks are definitely losing business to fintechs, right? Or is the pie increasing where it is bringing in more space to both of the players so that the collaboration is increasing?
I think definitely bank is not losing the business. I would say bank business will increase. As he mentioned that probably most of the loans are there on the bank balance sheet. So they will not lose out on the business for sure. But the problem will come when the regulation start impacting them. Now I am probably providing enhanced assurance for a person to the bank, basis which the bank is giving the funds. Now tomorrow if the CIBIL goes for a toss, credit is not getting impacted or the third party is not getting impacted. It's always the bank balance sheet. So the concern here is more that bank will eventually have to do a partnership with the RegTech and FinTech companies because they will bring the majority of the business going forward. There would be less, I'm anticipating less spamming calls from bank going forward. There will be more messages and probably WhatsApp messages which will start coming in stating that you want to apply a loan. But then there have been a lot of companies who have defunct of late. One which comes to my mind was Dhani Loans, something was there on the name. They used to provide just a loan of a 5 lakh in a span of 5 minutes. That was their USP. But it eventually flunked because regulatory came in between, that you are not doing any CIBIL check. They were just spending funds. As a customer, I am at a happy stage. I will get a finance, I'm getting more options. As RegTech and FinTech develops, I will start getting more competitive rates, I would say. But bank will remain the backbone unless we have something in the regulation space which comes in and intervenes with time. But yeah, I think it's going to be collaboration, not a competition.
Yeah, very interesting in how regulations can actually play a role in creating the level playing field going forward. So we've talked about lending, we've talked about how fintech is changing that. So I've heard about RegTech, insurance and all these things getting transformed with digital financial services, right? So what do you think is the next big area, or where is the most broad-basing, if in that terms we say, where is the next promising future, if we look at the vast plethora or the basket of digital financial services, which is the next big bet in terms of all these services?
I think the next big bet is going to come from the unserved. How do you create a data history from the people you haven't even touched? We talked about credit. You have to give loan because they can use AI to translate into some sort of a knowledge data that they can disperse a loan in 3 to 30 minutes. They can only do it because they have a lot of data, a lot of history, how the patterns and the behaviors of the individuals have been in the last 6 months or 60 years, whatever. They are trying to analyze it. There's a vast section of society who doesn't have any data history. And to serve it with the use of technology, with the fintech or digital services, or with the enhanced credit that we want to give. I mean, for 2047 to be realized, everyone in India should have access to this fast credit. To have this fast credit for everyone in India, you have to have their history, their data sources to be combined, analyzed, and result into some sort of a decision making that, okay, we can provide loan, we cannot provide loan, what is the pattern and behavior. So I think the next big risk, push, or the opportunity, whichever way it's going to go, is going to be from the section of the society where there's no history. Yeah. Digital history, sorry, I didn't want to say no history.
Yeah. So interesting in terms of how credit would again be a big bet, but then in terms of the under penetration, because a lot of people do not have digital history, CIBIL scores. It is an add-on to CIBIL score, but then a lot of people do not have CIBIL scores. So the question then comes, how do we do the underwriting for them? So interesting. Your thoughts on this, Tarun?
Thank you. I think I spoke about it a bit. Financial inclusion will definitely be our theme for next 10 to 12 years. We want to go to tier 2, tier 3, tier 4, tier 5 cities and make sure everybody is able to kind of, do the banking without having an intermediary physical bank in place. So that virtual banking is going to take off. The another thing which government is already exploring is that, multilingual banking. You could give instructions in a local language and then, the transactions gets through. Of course, a lot of education needs to be given, in these aspects. I see we have to continuously following 3 things, There's a very good framework, start, stop, continue. We should start being a leader in payments now. There is no doubt about it. I think we should go to other countries, start sharing the model, and and we are a service economy. We will get a lot of work, a lot of back office, middle offices can come here. So that is kind of a good start. What we should continue our technology advancements which we are doing. I see government has created a lot of AI centers, a lot of robotics center. Even our finance minister just announced a robotics center, a huge funding there. So we'll have to continue doing those technology investments. All the changes in the economy or in the organizations are happening via technology now. There's no doubt about it. What we should stop is, I think we'll have to just get out of our comfort zone. One thing I'll compare India and China, being lived in China and Hong Kong. There is and that could be an advice for people who are passing out. We see a lot of ifs and buts while you work, The expectation is that, I'll move out from a B school and I'll be given a cabin. It's not a bed of roses, not going to happen like that. And, so we'll have to get out of that zone, roll up our sleeves, do what has been assigned, excel in it, keep building strength. And then, I don't think so learning ends or strength building ends. And you can say, I'm an analyst, I'm good with numbers, so I'll continue to be good with numbers. No, just get into textual aspect, get into LLMs, the large language models. It has to be done. So that's something we have to kind of change the way we look our nation or our personality for that matter. So get ready for everything. So that's a short long answer of start, stop, continue.
Interesting. Your thoughts, Salim?
Yeah, so well, everything's getting high from a financial inclusion, financial literacy, urban versus rural. I think cyberspace, right? Security. Like everyone does digital transactions, but is it secure? Have we invested enough to ensure there are no crimes? Is that big space? Because the more this grows, even the frauds will increase. Right? So every now and then you keep seeing a lot of these frauds happening. either from a courier company or whatever. You get a message, click on the link. How can we avoid that? How can we educate people to ensure there are no frauds? Because with more and more everything going digital, even the fraudsters are starting to do digital, right? So how do we stop that is the next big bet. While everyone's building that, someone should also start building this so that it's an even game.
Yeah, interesting. So security is one very interesting thing that also needs to come with the digital frauds that are coming, data breaches and everything. So yes, your thoughts, Tarun?
Okay, so probably 2 points only. First is everything will go into an embedment route now. Be it finance, be it insurance, they cannot work in silo. It has to be AI adaptive or digital adaptive. That should be the lens which every organization should start. We have already seen a lot of success stories where companies who were working in a traditional way, and then they started adopting this embedment approach, and they have now scaled the business like anything. So this is the first thing which really need to be highlighted. And then second point is the government initiatives on CBDCs. So the central bank digital currency, central bank backed digital currency. That is also something which is giving us a true and clear picture that this is the way forward. UPI, Google Pay, Paytm, they are the success stories. They are just the success stories where we should look up and start building our business from there on. That is pretty much my answer for this question. But will it be okay if I ask another question to all the co-panelists?
Yes.
Okay, so this goes for all the three. Now, I am a second year B school grad student. I have a finance and niche in marketing as well, or data analytics. I don't know what to do. You guys are sitting here, you have done it. Probably that was because we were just there at the right time, right place, we did it. As a person who is sitting in the audience, I don't foresee where I should be seen in next 5 years. Should I go into a startup? Should I go into a company, whosoever I get entry into? What should be my vision? What should I be thinking of? Where should I be inclined? Should I be inclined more toward credits, more toward HSBC, Barclays or ZS? What should, as an audience, I should get away from these questions? Other than, what 2047 holds for us. Sorry.
Yeah, interesting. I think that's a very interesting and a relevant question for all our audience. Yes.
So where do I go in? That's the question. If, like Tanuj was trying to say, don't try to think too much beyond a point. Where do you go in is build a skill set that is required right now that you can excel into. And it's a very generic answer, but there are two things that I really value which you can build on. I mean, you have to have entire curriculum that you're reading in, you have to have the entire understanding of the financials and the markets, the rules and the regulation, but how do you do with your analytics and problem solving skills? Those are two things which is going to make you which is going to bring you a lot of value when you go in there. If let's say something interests you in the financial market or the investment banking and you really want to go in there, it is not going to be a the bed of roses going to be there. People die early who work on investment banks, and it's a fact. And I'm not trying to sugarcoat anything in there. How do you cope up with that pressure? How do you build your problem-solving skills and then work out there? So you need to map out your career for the next 3 years only. Everything else, the technology is disrupting anything. The companies are not sure about their businesses or futures for the 5 years down the line. So build up or map out your things for the next 3 years. Find out 2 to 3 core skills that you can fall back on. That's my term that I use. And build towards that. Everything else is important. I'm not trying to say these are the 2-3 things and then you are set for your life. Everything else that I am is teaching you, your courses, the skills that you're building on. But you need to focus on 3 skills in the next 3 years that you think you're going to do everything related to that particular area without getting tired about it. And then you can build a base for it. Everything else will just branches that will map out after 3 to 5 years and you will be able to hold on to any of them.
So I have a framework around it. So my framework is that suppose I start working on 21, 22 years old and I'm going to take a retirement at 60. Assume we've got a 39 to 40 years of career. I divide my career in 3 aspects. Initial 13 years, the middle 13 years, and the last 13 years. Initial 13 years, it's all in skill building. I want to work as much as I can. We'll not look for cabin, we'll not look for location if family permits and things like that. So we'll do, do a lot of execution related work, add more and more, keep upgrading myself. And I'm a fan of free education rather than spending a lot of money. Fortunately, with digital era, there are a lot of things available on YouTube. Every big universities are offering free courses. That requires a real zeal. Once you pay the fee, I know you will study, but do it for free, keep that motivation on. The next 13 years, it's a transition where I want to go to a middle management. I want to make sure few people are working under me, so I am kind of, advancing my people management skill, my stakeholder management skills, problem solving, these kind of skills. Delivering for the people also, because that's where I make most of my networking, my relationships. And the last 13 years, I just want to sit on the top, enjoy, give advices as much as I can, and make sure the other gets success because of me. So that's how I divide my career, and I want to give that advice to everybody.
So interestingly, Tarun, you have a framework for each of the answers. Continue, stop. So I think you're acing your PhD game. Yes. Any thoughts, Salim?
I think they've answered really well. I just want to say one on a very light note. जो करना है करना, ठीक है? मतलब if people want, I believe in going in the flow. ठीक है? Go with the flow. Try out things for the first 3-4 years. Nothing's gonna happen. You like something, stick to it. Don't like something, don't shy away from changing things. I've heard people saying, I've already started this, but it's very tough. What will people say? I'm going back to this thing. Doesn't matter. First 3-4 years, 5 years is the time when you can explore, try new things, and post that, select something, and just move forward.
Can I add something?
Sure, please.
Absolutely no. So, I'll tell you. Find a boss who you want to kill on the first day. I have the one who is sitting on the panel, Mr. Tarun Ahuja. So this guy rejected me in Barclays. I was selected in Barclays, I got the offer. He ensured my offer got cancelled, and then I had to come back to my original terms. So I was demanding an X plus 1, he ensured I only get X minus 1. So that was because of him. But I think probably that was 12-13 years back, I believe. Yeah. But since then the bond has gone really well. So I think find a person, on a lighter note, find a person who you can go when the things got really tough, rather than quitting it in midway. So I think probably you should find a 2 AM friend. That is really required once you get into the corporate as well. That's my only piece of advice.
Thank you. Interesting. So, I just, when we were discussing the next big bet in digital financial services, 2-3 technologies I felt were conspicuous by their absence. For instance, virtual reality, metaverse, or even digital distributed ledger technology or blockchain. What do you think about? Any of you would like to take that? What do you think? Does the future hold big for them as well, or do you think they will eventually fade away, like the Gartner's hype cycle, and then they will go away?
I can take this one.
Sure.
When you go shopping, you shop for the clothes which you want to wear on home on a daily basis, and then you shop a party wear. So these terms are party wear for me. I'll tell you, we've as a bank, and though the views are personal, we've tried blockchain. We've made sure one transaction go through, very good technology, but has got a lot of regulatory issues because of transparency. A lot of people, I don't want a transparency of my transaction to somebody else. So how do you want to make sure the blockchain addresses that? And I think we are far from it, from a blockchain perspective. The metaverse, we've got a HSBC branch in metaverse. You could visit, looks very nice from a virtual reality perspective. But what are we doing exactly? People still would like to see. There is a single vision. Either you go, what do you call that? Physical or phygital? Phygital. Yeah, exactly. So either that's the strategy, or a physical for the tier 2, tier 3. People still like to go to the branch and kind of get their passbook updated and things. So these are good things. I think it definitely a way ahead from a technology perspective. It's a more of an imagination that where can we go. But putting it back to the practice in the regulated arena is kind of difficult right now, is my thought.
So the use cases are particularly limited with the challenges that
Exactly.
Interesting. Any other?
I think we also tried it, but just tried it for the sake of being in the race. We did not really implement it much over it. We also had a couple of blockchain examples we had. Now the new term which is coming up is the AI implementation across all the policies. So we are doing it because we want to stay relevant in the race, but blockchain we did not implement. We did not do it more than 2 because of the regulatory spaces as well. So yeah, I think these are more of a gimmicks for now.
So, next question is, so for the thing that we were discussing is digital financial services, and here the talk also came around digital and physical channels. The point which we have discussed while discussing the next big thing, we discussed about the penetration that is required and the financial inclusion aspect. So what do you think, which channels are required for that to happen? Is it just digital services? Can they be just by going digital, by serving them with neobanks and net banking apps, can they reach these unbanked, or do you think are physical channels required? Because there's a trend that the total number of bank branches are going down as we see through the years. How do you think are the physical models relevant? How relevant are the physical models or channels right now?
I want you to go first. I've been picking my over you for the Mike doesn't want you to go first. I'm just joking.
So I think there's a difference between rural and urban. So while people in Bangalore, Mumbai, Delhi are extremely used to an app-based thing, right? You can open an account just by an app. So I come from a city called Bareilly in Uttar Pradesh. Their app नहीं चल रहा है. But for them, they still need. I need to go to the branch. I need to speak to someone so that I can trust. हिंदी में उसको बोलते हैं, मुझे गला पकड़ सकता हूँ. So at least I know who I'm talking to. So in Bareilly, so that's where rural and urban comes in. So you need that physical presence. For them, trust comes from physical. Digital is always risky for a tier 2, tier 3 city. So as long as you're not able to bridge that gap, I think it's a mix of both digital for tier 1 and physical for tier 2, tier 3. I think that's the bridge is important to.
Yeah, I just want to add another question here. So for you, for credit, for instance, what is the model going to? For instance, you want to capture the tier 3 and tier 4 city market. How are you going about it?
We want to capture that market. Is it easy? No. Are we doing something? Yes. So we have opened something called the Credit Foundation, which is mainly around financial literacy. So I think it's also somewhere around Sirmaur where we have started with a course of actually going and making people understand how do you, as simple as download an app, not credit app, any app, as simple as a Google, whatever. Right? So download an app, understand an app, trust the app. Right? So we have started with that. It's a long journey, not very easy to change the conventional way of how things happen in a tier 3, tier 4 city. But yes, we have taken a step towards it for an overall goodness, not from a credit perspective.
Yeah, interesting, because the efforts have to come from an industry-wide lens rather than just from an organization to make that happen. So interesting. Thank you. Mayank.
So I think what Salim said is the policymakers and the government is going to play a big role in that. And what Salim was trying to say, I think there's a lot of push for the financial inclusion, which is definitely happening in metros, tier 1, tier 2 cities. We have to shift our focus on the financial well-being, which is very, very important for the rural India or the people who are not really that well off when it comes to the financial literacy, use of internet, technology, and then financial well-being also is not there. So if you expose them to a lot of these easy credits, something which is available on a quick, it may not work well for them because they may not have a plan for what they're going to do with that kind of money. So a Kisan credit card is probably a better suited for the rural India rather than, by no means offense, or a credit app or any other app, not credit app. that's where the financial push for the inclusion plus well-being is going to happen. And then the foundation that Fed is creating, similar foundations or the social work can live it up to that expectation, build on that infrastructure or the base that has been created, and then take the push for the 2047. Just to explain, if we are talking about a developed nation in 2047, what do you associate with a developed nation? What we associate is the economic freedom that people have there. We all talk about countries like US and UK, they live on plastic money. That is a term being used, live on a lot of credit. For that to happen in India, we need to make sure that the bottom of the pyramid is being educated enough on how to live on the technology or on the credit or the plastic money.
Yeah, interesting. So both, I think, awareness plays a big role, and also developing, as you highlighted, contextual products that understand the users of tier 3 and tier 4 cities. Interesting. Your thoughts, Tarun?
I think we are doing it already. I see, and in the first panel they were talking about quick commerce. I spoke to a lot of people who come to my home for delivery, like Swiggy, Zomato, and I said, is it good enough? Are you earning well? And things like that. So they said that the whole business is on, an app. They don't get to handle cash. You've done a lot of research on food delivery platforms. I was reading your profile. So it kind of, see how money is rotating there. I'm not paying in cash. They are not getting paid in cash. They are obviously a fleet employee, not a permanent salary employee who will kind of, get the money in account. So that is happening. A lot more tier 2, tier 3, these companies are launching in tier 2, tier 3, tier 4. People are getting used to of app. So we are definitely in that journey. But we have to talk about that governance aspect, which Salil picked up, there are frauds happening. The scammers are also getting eventually, up to the top. So, yep, I see that happening, and I truly believe that will happen. The future is neobank. There will be no physical branches. You can't reach everywhere. But through these apps and inclusion, we will be able to.
Interesting thoughts. Tarun, Vatsalya?
I think first thing is that earning the customer trust, that is most important. Whenever there is a function of money which is involved in any of the cycle. So earning customer trust, giving that perceived nuance to the customer that they are in the hold of the transaction. It is not that everything is done online, you don't know what it is happening. So getting used to that platform, ensuring that even if it don't have a physical presence in the tier 2 or tier 3 city, there is a person who can probably visit people who are old aged, probably approximately 60 years and above. Then probably just making them aware of what has happened in the month during their transactions, and everything is in the same place. That could be the first thing. And second thing, I think most of the e-commerce and quick commerce companies have also started to give the option of, or probably taking away the option of cash payment if your credit history is not good. So I think government is also giving that initiative that probably your spend, basis your spend, transaction and history, we will ensure that we will only give you those options only which are credit worthy. So, but that is a long term to go for tier 2. This is something which is implemented in tier 1. So again, this perceived control to the customer and the earning customer trust over the period of time are the two key elements.
Thank you, Vatsalya. So I'm just going slightly off the flow, but I have always had this question and I could not resist because financial experts were here. So I just wanted to know myself, and also it would be beneficial for the audience here. In terms of, if we look at the financial companies in India, it's mostly been dominated by Indian players and digital financial services, if we look at it particularly. It's been, say, Razorpay, which is a leading payment gateway. It's been PhonePe, and again, an Indian company. Look at mostly it has been Acco, Indian company in insurance, Zerodha, trading app in India. With you, two global banks sitting here, is it really hard to crack the Indian market? Why has, say, for instance, a Stripe not able to come here and do business here? Or why has not another global company come in and crack the Indian market? What are the reasons for that? Just your thoughts, slightly on that front.
I think good question. And another dynamic I can add is that you will never see an international bank offering an auto loan in India. That never happens.
Yeah.
So we do ask that, why are we not doing this? It all goes back to what sort of business proportion or what sort of business proposal you are coming up with. So if you remember HSBC's old tagline, it was world's local bank. It became very clear that we want to reach to the end of the world and provide banking services. But then the profitability kind of becomes very important. So what we did is that now the tagline is opening the world of opportunity. So what we keep doing is that we keep looking at our businesses and see whether that business strategically makes sense to us or not. So because we are a global banker and Google goes to India, we have to open a banking service in India or arrange any other alternative bank where Google can bank with. That could be employee salary, that could be current account, could be any product you're talking about. Then you will also have to identify what is the product line you want to be in. A lot of Indian banks focuses on mass banking because of course they are the only engine from RBI perspective to kind of flow through the economic policy or monetary policy into the into the masses. So I don't think so 1,000 rupee of an account will be kind of required for an international bank. They are not here for that particular business market. So most of the international banks are heavy on their constitutional banking, their wholesale banking and lending services. So that is why in order to cater to global clients we have to be everywhere. But we also have a bifurcation of our home markets and non-home markets. In our home markets we do offer all the products, whether that's retail, loan, any kind of SME loans and stuff. But in the non-prioritized market we definitely go for only lending or institutional.
Is it that because it's difficult to understand the customer there, or the regulations, or what's the major pain point in, like you said, in non-home, you just do certain, say, broadly institutional lending or things like that?
So it depends, what sort of business model I want to follow. If HSBC is not known for having too many branches in their non-home markets. So Delhi would have 3-4 branches, but we provide all the premier services because that's the asset class we want to target in this particular country. So that comes from a lot of modeling of the numbers in the back, kind of infrastructure spending or the profit we are making. So we were in retail, I think Barclays were in retail as well, but they ultimately decided to move out because as we are a developing nation and the mass banking is more a need right now than a class banking. So probably that's, I could think, one of the reasons, why a lot of international players don't offer a lot of cheap retailing services.
Your thoughts, Vatsalya, because you're again
mostly aligned with that. Just to add, though we are not doing into the traditional products, but we are there into the class banking. So there are a lot of HNI financing, HNI clients which Barclays have in India, especially into the Mumbai region. We have a branch over there as well. Coming up from the traditional business, why we don't work in India is primarily because the competition is too much already. We don't, I think probably the biggest shocker for the bank was that they never anticipated so many NPAs in the first year because they could not believe that for so many percentage of the customers, the KYC was wrong, even when the bank has given the loan. So these were the kind of instances which could have impacted the reputation as well. So that's why they decided to probably not expand in this part of world. But yes, a larger offshore units are always placed because of the labor, cheap labor we have.
Would you like to add, Michael?
It's probably the same thing. We talk about a lot of technology and the international banks and the financial institution, which is probably okay in a developed nation, but when you come to India, the 1,000 rupees account, the requirement of the finance is very different. We talk about PhonePe, Razorpay. They cracked the market because they could see through the pain of the digital payment that it goes through. Paytm started in India, and the early adoption challenges that you have to transfer money to a wallet, which probably most of the upper class or the metros were willing to do it. I was uncomfortable transferring money to a wallet, to be honest, on a personal note. But when the other technologies, PhonePe is like, it's just linked to your bank. You don't have to transfer money to the wallet. You can link your bank, and the money can go from your bank, come to your bank. That kind of sort of a thought process, maybe it's coming from the Indian players who can see through the challenge of the Indian mind. I mean, just a hypothesis, I'm not too sure if that's the case.
Makes sense. Salim, your thoughts? Because, yeah, fair enough. So, the next question that we move on to is, we all talked about increasing penetration, financial inclusion and those aspects. What do you think are the challenges around that for particularly banks, non-banks? What are the challenges around financial inclusion? Particularly, we've talked about the channels in terms of going physical, building trust, but any other challenges apart from that, or financial inclusion? Because see, Viksit Bharat can only be if the development is inclusive. So, and also business is there because India is a hugely under-penetrated market. So from that sense, what are the challenges to financial inclusion? Your thoughts on that?
I wouldn't say challenges. I think it's an evolving trend which is going to catch up to all the challenges that we have. But like one of the things is, again, we have fintech and everything going around, and I'm going back to the metros and tier 2 because of the salaried employees and the kind of population we have. To have the similar push in a place where there are a lot of farmers who the needs are different. I mean, they want to grow the crop, sell it, get the money, and then plan accordingly on that corpus for the entire year. And the next get the next crop in the next season and all. So their needs, their requirements are different. And I'm pretty sure once we have sort of, I wouldn't say saturated, but once we have done this segment of the society, the next push is going to come from them. The foundations are already started to getting set up in there. It's a slow process, as you already mentioned. It's not going to happen overnight. But it's not the challenge. It's all about the needs and requirement of the next line of customer is completely different than what fintech already covered. As soon as we are able to crack that code, what is their requirement and how best technology can catch up to it, that's when it's going to happen. So I wouldn't say it's a challenge. It's just that the focus hasn't been there because it's probably the low-hanging fruit we are trying to grab first, and then we will definitely have to go to the second tier of the market where there's a lot of potential is there, but the same products, same technology or same approach is not going to work.
Thank you. That's the...
I think that diversity is an advantage, but it creates the similar challenge also. I spoke about, banking in regional language. So that language is one of the challenge. If we are going further towards the rural side, we'll have to make sure our banking products, services, the person who is communicating with the actual users is speaking in the local language. Language builds a lot of trust. I'm in UK, somebody speaks Hindi, I'm a fan. This is the person, kandhe pe sar rakh ke ro sakta hu. So, that is the kind of feeling language connects you with. So I would definitely say that, and it is not only through a person. All your digital channels has to speak the same language. So that is one thing I definitely see as a challenge. Awareness and trust, which Vatsalya spoke about. We'll have to make people aware. Even I am afraid my mother has a smartphone and she checks every bank messages with me, is it the right message or not? So it's not a story of tier 1, 2 or 3, it's a story everywhere that we are afraid of kind of, trying that. So we'll have to make sure there's a right awareness in place rather than what to do. That era is that, we should teach them what not to do. That's the kind of, balance we'll have to strike out. So these two challenges definitely is a kind of, blocking our way of financial inclusion.
Interesting. So language, particularly, I agree completely. Language is a big challenge which fintech needs to. Thank you. Your thoughts, Salim?
I think probably including something on financial education system. So, like if you go to a tier 3, tier 4 city and ask them to say what a WordPad is or a Excel is, they might not even know. Right? So, including that, like all fast schools in Bangalore, Mumbai, Delhi knows it. The kids, a 4-year kid is speaking fluent English, probably even more fluent than what we are speaking today. But that's not the case in tier 3, tier 4 cities. So I think the entire few additions in an education system is, I think, something is required, which is automatically from grounds down. So while you're growing up, you automatically start learning those things. So there is nothing new when you're supposed to be using it. You already know about it. So probably something there is probably required.
Thank you. Salim? Yes, Salim.
I think probably ease of use of interface as well on the apps which we use. I'm not sure if this is the right platform, but SBI is a horrible app. Yes. I would rather visit the branch, get rejected, come back home rather than go through that SBI unit.
That is more horrible going to the branch, but yeah.
Yeah, that's what I'm saying. So I think probably that makes a lot of difference. So Paytm is widely used just because it has the smoothest interface. I never face an issue with Google Pay or Paytm for the same reason. So that could be one of the addition. Another point which comes into my mind is that we need to educate the elderly people as well. Which Tarun was mentioning that people who are above 60 years are totally against the digitalization in tier 1 as well today. A lot of instances I've seen over there. So I think if there can be a more inclusive adoption for the elderly people as well, that would help gain more trust as well, because they are the generation who have seen that change as well. So these are the 2 points. Nothing.
Yeah, fair enough.
Can I add one thing?
Sure.
It just came to my mind that inclusion, it doesn't mean that doing it for abled. I think we have to think of specially abled as well, which we forget all the time. And that was a wake-up call. I was preparing a presentation for one of my CFO, and we usually in a lot of status reporting we use 3 colors: red, amber, green. Red means not going to happen. Amber, there is a risk. Green, all smooth. So I painted some status like red, amber, green. I just kind of colored them, simple Excel. I went to him and he said, I can't read it, I'm a colorblind. So that was a wake-up call that we do not think inclusivity as a whole. So now whenever I do anything red, I make sure I write R in the same cell so he can read a black font that this is red. So we have to take that type of people also with us while we are talking inclusivity. We ignore them because we are privileged.
Yeah, completely understand. And probably that is how financial inclusion not just needs to look at the underbanked, but also people, especially able people. Coming to the last question, and the question is more in terms of the regulation aspect, because what we've seen is regulation plays a big role in the financial space. So in terms of regulation, what do you think is the areas particularly related to digital financial services where the regulation, strong oversight is required, whereas some areas where probably a laissez-faire attitude can go on. So, final thoughts, Mayank?
I think given the time we are in, regulation is probably, I wouldn't say required less. We already have these SRO, self-regulated organizations, and a lot of freedom being given. I think Salim made a good point on the security side of it. So I am not too sure if we can go down on regulations. We really need to make it easy with the reg tech and everything. So we need to have the regulations, how to make it easier to follow them and report them and align with them, compliant with them is probably the push I would go with. But given the situations we are in, I think we need to continue to have a lot of regulations, especially when you are going to the underbanked or underprivileged, because that's where a lot of scams or the bad things can happen if it has not been regularized. Again, I'm sitting in an education institute, but Byju's had a lot of problem because they never regulated themselves in terms of who to sell their courses to and how to sell their courses. It was all about selling the courses. So from a noble idea of pushing their education to all parts of the society, they went in terms of selling the education and just building those subscriptions and the followers and everything. So the regulation needs to be more and more important once the push starts to go towards the Viksit Bharat and to the underbanked and underprivileged. How to make it easy, that's kind of the thought probably government needs to have.
Makes sense, yeah. Arun, your thoughts?
That's my favorite topic. I can go on and on regulations. Yeah, we do need. The only thing I want to just wrap it up very quickly. Rather than being a reactive regulatory body, India has to move towards a proactive regulatory body. We see Enron and then we do SOX. We see Tech Mahindra, Satyam for that matter, sorry. Then we do something about it. So we'll have to kind of do it upfront. The next set of lot of regulations I'm expecting in the space of resolution and recovery planning, where India has to make a lot of progress. You just can't take people money and say I'm insolvent. The second area I'm expecting a lot of regulation is sustainability. And I think there are a lot of regulations already there from an environment side, but we are done with environment. We know our climate analytics. Banks have now tied up a lot of manufacturing setup, energy company, thermal coal. They've came together and built it. Now we need more regulations from a nature side. It's talking about circular economy, talking about biodiversity, talking water as a risk and how we can do it. So ESG space we'll see a lot of regulations, in the coming world, if Trump allows. Yeah, he's anyway kind of, gone away with the DNI agenda and stuff. So these are few spaces I would definitely see a lot of growth in regulations, and we do need it proactively.
Yeah, I agree. I think regulation is always good. Good to be regulated, good to have regulations, good to have guardrails. Otherwise, you'll see 10 different companies doing 10 different things in 10 different ways, which will ultimately probably impact the economy, right? So regulations are good. Probably just timely regulations, like you were saying, more proactive, and no sudden surprises. If you can probably avoid those surprise notifications which comes at 9-10 p.m. in the night from on an RBI website, and you say, okay, what is this? So otherwise, regulations are always good.
Thank you.
Yeah, so anything impacting my capital and my RWA, regulatory lens will be on. So long answer short, we need to keep an enhanced view as an organization on whether my capital is being intact, whether my CET ratios are intact, my risk-weighted assets are intact, whether deposits which I have taken are used in the right sense or not. So if we can probably proactively start looking into that, there will be less regulatory fines, which really leads to a bank go down or probably reporting less profits. So I think a proactive measure of these can help.
Thank you, Vatsalya.
That's the skill set all of you should think about. If the regulations are increasing, we need regulatory experts. We need people who can read a simple line and find a regulatory meaning out of it, not just a plain English. So that's a skill set we are all hiring, in bulks nowadays. Regulatory change is really required. So would be one of the opportunity for you guys.
Interesting. And next big careers could be around. Also, it was interesting to hear all of you pitching for more regulations and industry actually calling for regulations. That was interesting. So, thank you. Do we also, Jay, do we take questions? Sure. Yeah.
Now we invite everyone to engage in an interactive Q&A session. The floor is open for questions.
Good afternoon, everyone. It was a wonderful discussion in my opinion, and there is a lot of value which every one of us has gained from this fruitful discussion. Sir, we have talked about multiple areas. We have talked about fintech. We have talked about the future of banking. But one thing which we didn't touch upon, and which is the next buzzing thing, is artificial intelligence and automation. So my question to all the fellow panelists would be, sir, as there are a ton of people who are, even in our college, who are placed in banking roles, there are a ton of people who are working in the banking and financial sector. So do you think that AI and automation is going to evolve in some sort of unexpected ways, that people could go out of their jobs? So I would just like to know your expert opinion on it.
So the last line caught my attention. The AI is losing its job to AI. The DeepSeek to ChatGPT is the meme I've been reading on the. I think we have been looking AI wrong in terms of job losses. To be honest, AI is equally important. Trade is all about AI, and all the fintech is all about AI. Because how do you think we are building those models and analyzing the credit scores? It has only benefited the economy and the end users, people who were not able to get loans. And I only learned it today, to be honest, from Salim, that a normal person below credit scores will get a loan if it supports via the algorithm or the data or the analysis to give the loan. So AI is not about jobless, and it's already happening. We probably touched about in different sections, but all the fintech is all about AI and the automation, the digital technology. Everything is going around based on that. We are waiting for the next push to come, where these buzzwords or the AI and digital financial services can go to the next section of the society. It's going to create more jobs rather than taking away the jobs. Of course, the redundant jobs, the manual filling of the forms, and the clerical jobs are going to go away, because nobody wants to pay for it if it can be done at the back office by some machine.
Yes, I believe that answers my question, as Tarun sir also talked about, the evolution of banks into neobanks as such. So my question was specifically targeted towards, the traditional banking rules which are into the picture, and I believe that has been answered. My second question to all the panelists would be, sir, as there have been a ton of financial crisis back in the past, so as all the finance trailblazers are sitting over here, so what are the blind spots which we as a society are ignoring in the financial sector which could lead to the next black swan, the next financial crisis?
So I'll go back to AI and come back to this. So you can't ignore, AI is not, 1970 computer came, I don't think so a job was lost. Only the job was lost who are reluctant to change with time. So if you are reluctant, I'm sure you use ChatGPT, so you're not reluctant. So no worries. Okay. So now we have to start talking about responsible AI. So AI is past now, let's talk responsible AI. So taking a credit decision in 30 minutes is a very positive use case of AI. Underwriting is everywhere. Insurance, underwriting, small loan, underwriting, credit card, underwriting. From a banking perspective, lending, underwriting, wholesale, underwriting. So if that job can be done by AI, so you know how underwriting happens, just give it a minute. So you submit your proposal, you submit last 3 years of balance sheet. Somebody picks that up and enter those figures in a spreading software. And then that spreading software takes a decision that, customer risk profiling and customer risk rating. So only that bit is getting done by AI. Like Mayank also touched on, all the transactional jobs will be going, not just the, and the same thing happened with robotics. Toyota involved robotics. Eventually they had to take off because the creativity was getting lost. It can't just train itself, give you improvement ideas and things like that. Only a human can do it. Now the black swan you spoke about, I think always the urge of earning more has gotten the financial industry into trouble. So let's pick up the example of the last turmoil we saw. That was 2008 where the subprime happened. Why did it happen? Because few financial players started saying that prime customers, subprime customers. So I'm going to lend to subprime customers on a better rates. So if the home loan is getting dispatched on 12%, I'm going to lend on 14. I'm going to make more money. They forgot the basic logic. They are subprime for a reason. Because they were not able to meet their financial obligations in the past. So what happened? You keep doing it, for 10 years, 15 years. What happened in the market? Oh, and they were safe, saying that, I'm giving a home loan. I have a collateral. The home is there. The ready to move in home is there. So collateral is at the back. I'm going to recover the money if the person don't pay. They did all their fancy modeling, applying better regressions and stuff. But what happened? The supply of home in the market increased. The price went down. So now you estimated the collateral is rupees 1 lakh. The collateral is only left rupees 50,000. So you lost there. There is a lending acquisition cost. You lost there. Now what you do? What a very difficult decision for the bank when the bank lends, especially for the distressed customer, is should I give him more money to turn around this, or should I just mark it insolvent? If I mark it as an NPA/insolvent, the problem comes in, I need people to go sell it off, that's another cost. I need legalities, the litigation would be there. So you understanding it's all cyclic, I'll have to spend more money in order to recover my own lending which I've given. So if you continue to ignore and do aggressive business outside regulatory, definitely we are very near to the black swan. But I know that, a lot of European countries and UK, they are very heavy on regulatory. They are thinking proactively, and we could literally copy paste because the type of business is pretty much same. That way we can save at least India out of it. Did I answer?
Yes.
Or did I confuse?
You answered it to an extent that the regulation, if we are able to, properly regulate the entire environment as such, then we can prevent the next black swan. And greed has always led to a black swan event, the greed of earning more. So if we could hold our urges as an industry, then we could prevent the next black swan.
Thank you. Thank you.
Thank you, sir.
Good afternoon, everyone. I'm Soumya from Uttarakhand University. So my question is, as per the reports of MasterCard, about 269 million data has been stolen from dark as well as from the clean web platforms. And there is a loss of about 48 billion dollars to 2023 e-commerce platform fraud. Sir, these are the threats for any kind of fintechs nowadays. So how CRED is going to deal with such things? This is my question.
Like we said initially, right? It's about investing money in security tools. That is one of the ways for even 2047, like we discussed in the first or second question, was the more you invest on financial platforms, the digital financial transactions and all the stuff, so you have to equally spend money on building good guardrails, building good security norms, building good security infrastructure, basis which you can avoid all these crimes. It's an ongoing process. You'll have to invest, make, develop, market, similar to how any other products are. Not sure how CRED is doing, but I'm just saying.
Sir, another problem is that like you have talk about CRED Foundation, which is working for educating people and availing them for the financial services. But sir, as a student of commerce, we have been taught about commerce and about finance in the stage when we are in class 11th. So I believe we should educate the youth before that so that they can know that if we will earn, where we have to invest. So what would be your perspective on this topic?
I think again this last point which I said was about changing or probably including a few in the education system right from the very beginning, right? So we don't want to learn, for example, personal finance. Like I go to probably B schools, I give a session on, they know they've got the money, but they don't know what to do with the money, correct? So it's important to know how to invest, how to save, where to invest. All of those things should be a part of an education curriculum and not probably just on YouTube videos.
Thank you so much, sir.
Good afternoon, sir. If you look at it, the recent trend in finance sector is merger and acquisition. Even recently, TVS Group acquired Home Credit to increase their book lending. So, how do you expect future digital financial services? Even Salim sir spoke about how credit increases the parameters for banks to give loans. So, will the banks accuse such fintechs to give the niche technical services? Or how will the merger and acquisition in the future digital financial service be?
See, by doing that, we'll kill what we are trying to build. Because I told in the start that, the strength of a bank is trust, the regulatory backup, a lot of liquidity. And, we report our liquidity on daily basis to RBI, to all the, regulators rather, and how much liquid we are. From a treasury perspective, that's very important. And what fintechs bring to the bank is agility, a quick change, that technology innovation. So if it doesn't mean that, we don't have technology teams sitting inside the bank. I think we are a huge bank operating in 60 countries. There are enough technology people sitting. But that kind of, everything has to go through a change. Let me give you a very simple example. If you want to change a batch to run a report from 2 a.m. to 2 p.m., would be a week task. It has to go to business architecture because it causes a process change. It has to go to a technology architect. A BA will write the requirement. Somebody will draft the test cases. Somebody will do the test cases and confirm that the testing is working. Then the rollout map will be done. So you see how much governed we are because all of my architecture has to be reported to technology regulators or my regulators. But that's not the requirement for the innovation champions. So that is the reason I think this collaboration can only work if we continue to collaborate to compete rather than acquiring each other. I don't think so that model works, but that's my personal view.
Thanks.
So I have one question. With the rapid rise of AI, blockchain and digital payments, how do you see the future of financial services evolving and what key skills would finance professionals need to stay relevant in this transformation?
So with the evolution of the financial services, that's your question, right?
Yes, sir.
I mean, stay relevant is like, it's all about technology and the responsible AI, like everything. So your core remains your financial knowledge, your accounting, the things that you're learning in your B schools or on your certificates. The staying relevant is staying relevant to the technology. We talk about blockchain and it's not a good use case right now, but people are still trying because they want to stay relevant. You never know when it becomes a good use case and it can be expanded to beyond its limited use we have right now. So I don't know if I'm answering properly or not, but to stay relevant is stay relevant with the technology and the change. Everything else has to go back to the core with the regulation that we're doing. There will not be, and I could be wrong in saying that, there could not be a day where you can, bypass the regulation and do something dramatic anytime soon. It all goes through a change. You should be able to spot the change, learn the change, and be the change.
So, good afternoon, panelists. So, my question is to Mr. Salim Liu. So, sir, you mentioned that CIBIL does an algorithm, takes variables A, B, C, and then gives out a credit score. Now, credit goes one step ahead, adds another 2 or 3 variables, and expands that credit score and gives it to the bank. Sir, in my opinion, or I'm asking it to everyone, don't you think this is wrong? Adding just another few variables just to get that person above a certain limit of CIBIL score, just to give him the loan. Because this is clearly a case of data tampering. You cannot just go ahead and add another few variables in order to make that guy available for a loan.
Let me probably clarify. So if you have 100 users on the app, I do not add XYZ for all 100. We obviously analyze XYZ for all 100, and then we, out of that, basis our own model, we take out those 10 people whom we think are eligible for loan. It's not for all 100 where we just add an XYZ and tell XYZ, here you go, ABC plus XYZ go give you loans. We run our algos on all the users and only a selected few come out of it. So it's not data tampering, it's not bottoms up, right? मुझे उसको loan देना है, so I'm increasing his score. It's other way around, because his score is higher, I go present it to the bank saying you can go give the loan.
You're not changing the CIBIL score, you're just saying this is the added. So they're not changing the CIBIL score, they're just providing an additional set of information. So the score is still bad in CIBIL for the bank. Bank can see it, the CIBIL score is 700, the bank can see it. All they are doing, we feel this person can be given a loan because there are 100 more points, we can see it through the data or the pattern, whatever they submit to the bank. So the CIBIL score is not getting changed anywhere, no data tampering.
So do you make that information available to the bank as well? That this is the additional information that we are providing you and now you can analyze it.
So not all data can be shared because of data security reasons, but then there's a model which gets submitted to the bank, and like I said, a final go no go is the bank decision, not the bank decision. So after all, if it runs through all of their risk analysis, only then a user gets a loan on the product.
Sure. So what happens when you apply for a loan? There are various checks. Not only CIBIL is the factor. There are various checks. And once you've been given a loan, you are already put on a percentage which is called PD, probability of default. So what CRED may be doing, I'm not sure, is just telling you that you assessed the probability of default as 100%. It's not 100, it's only 10. And these are the factors, because these are the spending patterns. These are the repaying patterns. This person took 2 times, buy now, pay later facility and were able to pay. So they've got that abundance of data available, which they are kind of, matching with the exact scoring of CIBIL and then only providing the recommendation to the bank.
Sure. Thank you, sir.
Thank you everyone for participating. This has been an insightful discussion. Today, we have explored the transformative role of digital financial services in India's economic future. From seamless transactions to financial inclusion, our panelists have shared valuable perspectives on the evolving financial landscape and of course career management too. So a sincere gratitude to all the panelists for their time and expertise. Now I would request Professor Ujjwal to present the guest of momentum.
So, as we conclude, let's take a moment to reflect on the meaningful discussions we have had today, covering marketing, human resources, and finance. We would also like to express gratitude to all our panelists, faculties, participants, administration, our placement chairperson Dr. Karthikeyan Balakumar, Infra and IT committee, media committee, and to all the clubs for making this event a success, and for their invaluable support to bringing Business Conclave Pinnacle 2.0 to life.
A special thanks to Uttaranchal University, students, faculty and all the members for being participants here. As we conclude, thank you all for being a part of this event. We look forward to seeing you next year for an even bigger and better business conclave.